Hello and welcome to Real Day Trading and the 5K challenge from hell. So what happened today? Well, James Bryan Bullard happened. So everything's going pretty okay. Not bad. We're right around up here. The count's almost at 4,000 at this point. We're doing well. And then good old JBB comes out and decides to mumble his way with, well, I think there should be even more aggressive rate hikes, and it should be bigger rate hikes. Yes, that's what I think. I'm an old white male, and this is what I do. I sit here and whine and be hawkish. Well, everybody knows that Bullard and Powell do not see eye to eye on this. Everyone also knows that Powell has the final say here. So what the market decided to do was price in any chance that Bullard was right here. And so we had already priced in these rate hikes, particularly on technology stocks. We had already put in and squeeze them down to the point where buyers found the prices attractive. But now you have the possibility of even larger rate hikes. So what happens? You get this, right? Huge overreaction. I mean, hot inflation number this morning, market doesn't care, goes up. Hey, we might go to war in the Ukraine, market doesn't care. We're going to go up. There's a raging pandemic out there. More people are getting sick and the death rate's still going up. Market doesn't care. But Bullard, well, we're going to have to raise rate hikes just a little bit more, I think. Yeah, that's what we're going to do. And bam, any excuse, cheaper stocks, drop it. Who gets hurt here? Retail traders, of course, as usual, get hurt. But not us. No. We're on to you, Bullard. Because what the market is now set up for is the worst case scenario is priced in. And any good news, meaning the rate hikes are not going to be as aggressive as Bullard says, or the next index report comes out and it doesn't, go back to 1982 for comparison, and we're going to get a pop. So why is the market still ready to pop? Well, because earnings are so damn strong across the board. So you have this little economic conflict here, right? Everyone's saying how bad things are, but yet these companies continue to post record levels of profit. Now, naturally, of course, they're cutting overhead, right? I mean, when you're making more money than you've ever made, the obvious thing to do is to just fire people and cut the overhead to make the people who still work in those places now have to work twice as hard for the same amount of money because all the people they had to help them are no longer there. And then the people that used to work there are trying to figure out how long they can survive off of, if they are lucky, to get some severance. A lot of those people wind up coming into the market. And that is who we're here for, to help people who want to get out of that cage and be financially independent themselves. But we've decided to do a 5K challenge, probably in the most difficult swing trading market I have seen in years. There's no consistency to it. Tomorrow we could have a violent bounce and head right up to 460. Or we can continue down and test the 200 SMA. So it's very difficult, right? Because if you're in a market that's trending and it's a strong trend, well, then you don't have to balance your portfolio. I would be, long D-Dog and long MU, long net, all of them, and just let them ride. That's what we did last time. Market account doubled in 3 days. But here we are in the most difficult and ridiculous market I have seen. Well, probably I have seen, period. I'm sure there's some old timer out there who's like, I remember back in 1987 when, we called it Black Monday. That's what we called it. And everybody just, oof, my goodness, they just dropped like a rock. Well, shucky darn, I don't know. It was bad, I'm telling you right now. Well, if we could find that person, that's what they might say. Anyway, moving on to our account. Here we are. And we're at 3163. We actually went up, $37 today. Well, we made $37. Where else can you work for, 7.5 hours and 6.5 hours and make $37? That's great. Well, let's take a look at what we did, though. First thing we did was we got credit for NVIDIA. Well, that turned out to be a good move, right? Because NVIDIA wound up, take a look here, NVIDIA. Okay, so we took credit on NVIDIA at pretty much right in the beginning at 633, and right around here. We could have waited a little bit. We might have gotten more. We would have gotten more here, but look what happened. NVIDIA down $9. So that spread would have been shot all to hell. If we waited for a little bit, would have been better, but still, I'm glad we got the credit when we got out. We actually made money on the NVIDIA trade, not as much as I thought we were going to yesterday when we were up here, but we still took a profit. Okay. Next, we then took profit in MU. Took a nice profit in MU. Wound up going back into MU because, and we took profit in MU at, let's see here. Right around the same time we took profit in NVIDIA. Right? We were just taking profit right off the bat. MU, look how strong this is. So I took profit here. Obviously, it jumped up. This one here, if I would have waited, we would have gotten a lot more, probably another $400 or $500. So this was a case where it was a really strong stock. I should have waited to take profit on. NVIDIA, I get, it was a spread, but MU is just a powerhouse right now. In fact, the market dropped pretty much 100 points, and MU still finished up $2.86. So this stock is really strong against the market. And any market tailwind behind it, this thing is going to fly. I wouldn't be surprised to see it challenging all the way up here. This is its all-time high. I would not be surprised to see it challenging $98. I don't know if it's going to do it tomorrow, but we have and went back and bought the, take a look here. It was our last trade. What we did was we got the 92 calls from February 18th for $2.22. And those calls are currently worth about $2. Why? Because the market just kept going down. And even though MU is strong, any stock with that type of market drop is going to come down with it. We cashed in Dell and pretty much broke even on Dell. Let's take a look at Dell. Dell, you can see here, also still pretty strong. It was down today, but only $1. It's still a pretty strong stock. And Dell, we cashed in around 637. So we cashed in right around here, pretty close to the top. we wouldn't have gotten much more. Maybe we could have got another 30, 40 cents. We only had one option on that, so it's fine. Amazon, we took $6.40 credit for, which was a really nice profit. Now, obviously, we could have stayed in Amazon, and you see here, it dropped all the way down to 31.75. That is well below 32.05 that we needed it below for our put debit spread. And that spread was a $10 spread. We got $6.40 credit for it. I don't think we could have gotten much more by waiting. You know, over here maybe would have gotten $7 for it, $7.50, but we needed the capital and we had decent profit. And you can also see Amazon starting to show some relative strength here, right? It's not down as much as you would think it should be given the drop in the market today. So I'm happy that we closed out Amazon. BKKT. Now this is a weird one because we closed it for a loss, even though we were way up on it yesterday, right? And when we closed it at 650. Well, that is right around here, 650. If we waited on that one, that's another one. MU and BKKT, we should have waited on. I should have waited on this stock. However, I went back in because, you know, it's going really, the volume is incredible. This stock looks like it's about to take off and certainly break through here its 50-day moving average, right? And that's not really a strong line of resistance anyway, this particular one, because it doesn't have much behind it. But I went back in and took at around 7:30 or 10:30ish, took it again, the $7 calls for February 18th, and now it would be right around here. I took it. So close to the top. Then it dropped. So right now BKKT is kind of costing us a bit when it was well in profit. So that was a little bit of a reversal. Our hedges are doing great, but that one, not so much. Okay. Going back down the list here. Then I did a Google put debit spread. Google was weak. I needed a hedge. Got that one for $6.77. Managed to sell it 5.5 hours later for $11.77 here. So it's a $500 profit return on that hedge. Good thing we did that. I added to BBIG and I added to BHG. BHG I just keep adding. Right, BHG, we now have 31 calls at the $5 mark. That is actually in profit. We made $94 on that today. All that stock needs to do is to go to $4.10, and those calls will go to 20 cents, making a 400% return on that play. So that's why we're there. I took MOS because MOS is extremely strong. Take a look here, MOS right there. Great daily chart on this. And for a day again, when SPY has just fallen off a cliff, look how strong this is. So we got, there we go. That's MOS. Look how strong this is. Yeah, it dropped a bit today. Again, no matter how strong a stock is, when you have SPY doing this, basically falling off a cliff here. I mean, look at this. This damn thing, this is a bad print, but when SPY's doing that, there's not much you can do, even no matter how strong the stock is. So the fact that MOS dropped doesn't bother me. It's still really a strong stock, and this was an HA continuation here. If you just put on the HA candles, you can see it. Look at that. Look how smooth that is. Oh, that's a little bit of a a pause, but this is a strong upward trend for that stock. Okay. And then we did a put debit spread on Johnson & Johnson. So we have 2 hedges now. Lyft, Uber got paused because of pending news. So I took a chance on grabbing 3 Lyft lottos just in case news was positive. Turned out it really wasn't. I mean, it was and it wasn't. So those probably will just die. You know, if I can get 10 cents for them tomorrow, I will. CFVI, our old friend, got those. It's a strong stock, keeping those, and did some Ford lottos as well. Ford had some really good news, good announcement. All it needs is some market tailwind behind it. And you can see Ford, for 9 cents, I got the $19 call lottos. Yeah, it's down here. It was up here today. This is the market dragging it down, but it got some really good news on production of EV cars in its Lincoln division. I think tomorrow it comes up to try to challenge once again its 100-day moving average. All we need is those calls to get close to $18.75, and we should double our investment on it. And then finally, I had the choice. Like I said, Google up $500. I used the 1-day trade we had, right? You got to use those very judiciously. I did not want to lose a $500 profit on a trade in this account. If the market jumps up tomorrow, that's great for everything else, but our Google would get crushed. But I replaced it with another hedge. I replaced it with Adobe. Now, normally I do those put debit spreads and they had to expire that week. That's how you do them, right? The at the money ones, you get less than 50%. You pay less than 50% on the debit of the spread. So if it's a $5 spread, you want to pay less than $2.50. And you want them expiring that week. That's having them expiring more than a week out is, you're not getting any benefit from time decay here on these. It's not a credit spread. But in this case, again, this is a hedge that if tomorrow we get a violent bounce up, even though the stock is weak, it's going to drag it up with it, and there's not going to be time for that spread. But putting it on next week, on February 18th, I will have a chance to buy back the short puts and then just let the long puts run. So that's what we're doing on Adobe. Overall, 3163. I am still hoping that tomorrow, end of day, we will be at least at 4,000. Really want to be at 5,000 going to the weekend. That would take an extraordinary day tomorrow. Could happen, any one of these stocks. If BHG jumps up to $5, if we get a MU going up to 98, 99, any of those things happen, and this stock this portfolio suddenly is at 4,000, 4,500. But what you saw today was the power of hedging and balancing, because this portfolio did not lose. This account didn't lose any money, despite all of this crap. We didn't lose a dime today, even though we're full with bullish positions. We stayed even. And that is because we were properly hedged. Properly hedged means, a Google hedge, a $20 Google hedge allowed me to take $500 in profit on that. Well, that counters any of the losses in the other positions. So hedging your portfolio in a market like this is really, really essential, because if you can continue to hedge, right? And yes, it prevents you from having blowout huge days. But that is why I have been putting in this portfolio positions that have the potential. These are kind of risky spec positions, like BHG, 31 call options. at a price of 5 cents, right? So it's a $150, $155 investment there. But if this goes to $5, these options go to 40 cents. Well, now this is worth $1,200. That's the type of plays you need to do, because everything else being hedged and canceling each other out, we're going to go up $20, $30 as long as the market's like this. So it's protecting it. But you have these breakout potential stocks in here that do not do much damage on the downside. But if they come through, they can take the account to where it needs to be. So there are all different ways you can work on doubling, increasing your account, right? A lot of it depends on the market. What is the market doing? Right now, the market is unpredictable and choppy. Okay, well, you can either not trade. Well, that would make a really boring challenge. Or you can trade, but make sure you know how to hedge and make sure you have key positions that allow you to take huge gains with little downside. And that is what we're doing here. Other than that, as some of you follow me on Twitter and otherwise know, I once again believe this is total bullshit. But is it going to continue tomorrow? I don't think so. I'm prepared for it if it does. But do I think this is going to continue tomorrow? No, I don't think it should have continued like this today. This starts out as algos. These are algos here. This is panic selling by a lot of retail investors. And so, once again, institutions do not get hurt, retail investors do. If you do the walk-away analysis, by the way, and I really suggest all of you do that, and I'm working with TraderSync on integrating the walk-away analysis actually into TraderSync, so you can do the analysis there. It is extremely telling as to, are you taking profit or exiting too early, too late? Is there an issue with picking your stocks? An easy, surefire way to find out if there's an issue picking your stocks, whether it's an option or not, put in the entry price of what the stock was when you went into the trade, right? So, let's say you went into, Microsoft and at $302. But you got options. But the price of Microsoft was $302. Just do a 1 month out analysis. What is the price of Microsoft at the end of the day from when you traded it? 2 days later, end of the week. 2 weeks later, end of the month. If at no point in that time zone, that time spread of different days or week, end of the week, end of the month, would have you been in profit? Right? That means you pretty much bought Microsoft at its absolute top for at least the next month. It has not gone back above your entry price. Well, then you have an issue on the stocks you're picking. If it goes into profit, but goes into profit too late for your options, well, then you have an issue with the type of trade you're making. And if it goes into profit after you exit your trade, but you still could have taken profit. So let's say you had a call option on it and it expires, next week. And a month from now you do the analysis and you look back and it would have gone into profit on Monday or Tuesday, but you got out of the trade on Friday because you saw price action like this on SPY, then you are getting shaken out of too many positions. There's so many different ways to use it and figure out where the issues are. Because I'll tell you right now, 95% of stocks at some point will be in profit over a month period that you pick. If that is not the case, you are not picking the right trades. You should not be, there should not be a scenario where more than 5% of your trades, you pretty much picked it at the absolute height and it just never went into profit after that. So the walkaway analysis is explained in the wiki. And speaking of the wiki, I want everyone to continue to read the damn wiki. I keep getting questions and questions and questions, and the answers are all in the wiki. You need to understand, I get probably, and there's no hyperbole here, 75 to 150 questions a day. Whether it's email or message or post or Twitter or direct message on Twitter, I get 75 to 150 questions a day. I can't answer all of them, and that's increasing. It's only going to keep increasing. That is why the wiki is there, because almost every one of those questions can be answered in the damn wiki. There literally is everything in there. So please, for my sanity, before you ask a question, read the damn wiki. Good night, everyone.